Bitcoin volatility. Right? That's what everybody wants to know. How to trade Bitcoin volatility. Well, first of all, do we even know what volatility is? Right? If you've never seen any of my videos before, and let's face it, you probably haven't, then, well, volatility is simply the standard deviation of returns. What do those words mean? Standard, or normal, deviation, or difference between places, right? Move from one area to another, deviation of returns. What are those returns? The returns are the returns on investment, specifically the log returns on investment. So, the standard deviation of returns is the movement away, or the distance between, right, the mean of the returns, like an average, but the mean of the returns, and the actual returns, right, where they actually end up. In other words, it's the spread of data around the mean. You can look at entropy, and you can look at the correlation of the entropy. It's a different correlation, but it's still a correlation of entropy. And they can tell you whether or not the asset is going to go up, down, or sideways. So what works with volatility works with entropy. It's slightly more finessed in some ways, but they both work the same. And in principle and in practice, they work the same. The 6 major tendencies that work on volatility are the 6 major tendencies that work on entropy. And really, there's only those. Yes, you can find other tendencies, but they're not as significant, generally speaking, statistically speaking, and probabilistically speaking. So how do you trade volatility? Well, again, you look at the volatility, and you look at the correlation to the price action. So, for example, if the volatility is low and expanding, or is the volatility is contracted and beginning to expand, and the correlation is also contracted and beginning to expand, well, then the tendency is that the probability of the price action will go up. Right? And if they are both fully expanded and both begin to contract, the price will also go up. Right? And if the volatility is contracted and expanding, and the correlation is expanded and contracting, price go down, etc. There's really only 6, and guess what? You can learn them just by going to alphatradinghq.com/discord. There is a free cheat sheet there for you in the free tools channel. It's free, completely free. Guess what? Not only is that free, right, as I've said many times on this channel, we will literally give you, upon request, free access to our volatility starter pack of indicators, and a free pre-populated chart that you can use with those indicators. You can even use them on a free TradingView account, by the way. I mean, of course, if you have a paid TradingView account, that's even better, because you can obviously have more indicators on there, etc. But you can use the most basic version even on a free account. And we have a couple of hacks for you to do it with. They're not really hacks, but they're just like ways for you to do it, all spelled out very clearly in the various free channels in our free to access Discord. And you get free education, free tutorials, very in-depth tutorial. You You get access to the live chats with other people who are trading the VEPs. You can join the live streams, ask questions there in real time by chat, text chat, or by voice. Why do we do that? Because we're sick and tired of seeing traders get wrecked by using terrible lagging information, which is known as traditional technical analysis, and using over-leveraged positions, and basically losing their money because they're doing bad things when it comes to trading. They're making bad decisions. Right? They're not taking profits early and often. They're not limiting their loss, and they're emotionally attached to their trades. Right? Any one of those factors, and any combination of them, will get you wrecked. And using lagging information on top of that would guarantee that you get wrecked over time. That's why more than 99% of traders end up getting wrecked when it comes to retail traders. Okay? Professional traders at HT firms and at big quant shops, they don't get wrecked. You ever wonder why that is? Yeah, sometimes, very, very rarely, occasionally, somebody will make a big screw up. And when they do, it's usually the kind of stuff that makes headlines, because it's a big deal. When an actual professional trader loses, billions of dollars or something, which does happen. But most of the time, they don't. Most of the time, they make money. And over years, every year they tend to make billions of dollars at these big HFT firms. Right? Think about why that is. Like, where do they put their special emphasis? They put their emphasis on trading high frequency, which means they put millions of trades on per second. Their average trade lasts less than 0.2 seconds, and they just have big position sizes overall, in which they basically split their bags into many tiny little bags or little buckets, and their goal is to run as many little buckets through the liquidity stream as they can during their trading session, fill up those little buckets of liquidity and pull them out as quickly as they can. You know what my goal is as a trader, and what our goal is as traders of VEPs? The same exact thing. Right? I always talk about those little buckets of liquidity. You know why? Because it's a lot easier to move little buckets of liquidity than to try to move big ones. Right? When you see somebody placing an order of hundreds of millions of dollars on an asset like Bitcoin or whatever, that's actually not an HFT firm, right? Unless they're making a big buy for like holding reasons, and they won't usually do that on a centralized exchange, right? They'll go over the counter or somewhere else. And they could do it on an exchange, but it'd be rare. So, yeah, if you want to learn how to trade volatility, again, just go to alphatradinghq.com/discord, and you can learn how to trade volatility for free. We'll be happy to show you. That's what we do there. The community is built around traders helping traders, so you can ask anybody for help, and everybody will give you answers using the same information, which is leading information. All right, take care, folks. Happy trading.